is when will Tesla start to see benefits in terms of revenue and profitability related to autonomy, FSD, fleets, Optimus Prime potentially. And I want to start the pressure point with a response that Elon had to the last question on the call. The question was related to how does a Trump administration impact the availability of tax credits, and if those tax credits go away, what does that mean for your vehicle sales and for your storage and energy business? And Elon took the question in his response in a totally different direction, which is related to the pressure point. And he said, I quote, "I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold their stock. They should sell their Tesla stock. If you believe that Tesla will solve autonomy, you should buy Tesla stock. And all other questions are just noise," end quote. And he has said variations of this in the past. If you don't believe in autonomy, you should sell the stock. But of course, he ends the call by reiterating that. And what he's effectively saying is that everything that's going on in the business today doesn't really matter.
So today we're talking about Elon Musk UAW federal labor charges. Will Tesla keep dominating? An article by Seeking Alpha. Also, the Motley Fool reveals Tesla's future within the next 12 to 24 months and typically asks questions from investors about the company. Now, this is from Teslarati. If you have listened to the Trump and Musk interview, it was pretty interesting. So here we go. Following an X Spaces session with Republican presidential candidate and former US President Donald Trump, Elon Musk has now extended an invitation to the Democratic presidential candidate Kamala Harris so that she can discuss her plans for her potential presidency on the social media platform. Musk posted his invitation to the Democratic presidential candidate on X. Despite his previous criticism against Harris, Musk noted that he was happy to host Kamala on X Spaces too. The Harris campaign does not seem to have acknowledged the CEO's invitation yet. As of this writing, 22.8 million have turned into the conversation between Elon Musk and Donald Trump. So what is your opinion? Do you think she will accept the invitations? No worries. You can be completely neutral. On Tuesday, Teslarati reported, almost want to say here we go again. Elon Musk has responded to news that United Automotive Workers, or UAW union, opened federal labor charges against him and the presidential candidate Donald Trump, following the interview between the two this week. The conversation between Musk and Trump covered a number of topics such as labor, global politics, electric vehicles, and Trump's 2024 campaign, amongst other subjects. On Tuesday, the UAW announced that it filed federal labor charges against Trump and Musk after the presidential candidate mentioned the idea of firing striking workers during the call, which would be in violation of the federal labor law. And this is really interesting. Elon's response to the UAW. Musk alluded the recent investigation into UAW President Shawn Fain, nothing that the previous president of the union were actually found guilty of bribery and corruption. Fain is currently being investigated by an independent monitor after the union's secretary-treasurer claimed that he had used retaliation and intimidation tactics when certain expenditures weren't approved for his office. So this is from Seeking Alpha. Tesla Inc. dominates the EV market, but AI technology will move it to the lead long-term in the robotaxi market when it reaches level 4. Tesla's strategic shift to an AI-driven approach in autonomous vehicles sets it apart from competitors using LiDAR technology. Tesla's cost-effective AI-driven system and scalability positions it for higher revenue growth compared to LiDAR-based systems. Tesla has been one of the dominant EV companies in the period from 2010 to 2012. Tesla held minimal market share as the company started scaling production with the Roadster and the early Model S vehicles. Market share increased in 2013 to 2017 with the introduction of the Model S and the Model X, further increasing after 2018 with the introduction of the Model 3. The dominance is difficult for investors to process when Elon Musk commented that Tesla is an AI company, not a car company. the current status of each competitors to Tesla in terms of ride-sharing coverage and ridership varies significantly across the board. They are in various stages of achieving level 4 self-driving capabilities and the need for human intervention, according to BMW. Now, this is what is going on right now. So we are at level 2, which means the vehicle can control both steering and acceleration as well as deceleration. Here, automation falls short of self-driving because a human sits in a driver's seat and can take control of the car at any time. And this is what we're thriving for. Level 4. This is considered to be fully autonomous driving, although a human driver can still request control. In level 4, the car can handle the majority of driving situations independently. Tesla's full self-driving FSD package, considered to be at level 2 autonomy, and is far from achieving full autonomy required for level 4. But investors need to consider Tesla's strategy that has increasingly emphasized its artificial intelligence, AI, and software capabilities. The key difference between Tesla and robotaxi competitors is the strategic decision to shift from LiDAR. LiDAR is light detection and ranging. It's a remote sensing technology that uses laser light to measure distances. Tesla's strategy, however, on the other hand, uses a combination of cameras, radar, and its FSD computer. This is what Gene Munster believes about Tesla. Gene Munster, co-founder and managing partner at Deepwater Asset Management, recently told CNBC that Tesla is on pace to be a $3 trillion company. Munster highlighted opportunities related to artificial intelligence, like FSD software and robotaxi services, as key growth drivers. His prediction lacks the specific timeline, but a $3 trillion valuation implies a 335% upside from Tesla's current market capitalization of $687 billion. Gene Munster believes FSD could generate $100 billion annual operating income through subscription and licensing fees within a decade. According to the Motley Fool, Tesla may be an artificial intelligence company disguised as an automaker. The bull case for Tesla says its core electric vehicle business is a stepping stone to bigger opportunities in software and service, especially those related to artificial intelligence. Full self-driving software is a cornerstone of that narrative. In theory, FSD will support direct monetization via subscription and licensing, and indirect monetization via autonomous ride-hailing robotaxi services. 2023, Elon Musk told CNBC David Faber that robotaxis could push Tesla's gross margin towards 70%. That would be a dramatic increase in profitability compared to its gross margin of 18% in the most current quarter. Adam Jonas at Morgan Stanley believes Tesla could be a formidable player, if not an outright winner in the race of autonomy due to its strong presence in the electric vehicle market, which itself has given rise to a material data advantage. Adam Jonas discussed that idea in a note to clients in its quest to solve autonomy. Tesla has developed an advanced supercomputing architecture that pushes new boundaries and custom silicon and may put Tesla in an asymmetric advantage in a $10 trillion total addressable market. And remember Dojo. The Dojo supercomputer is another potential revenue stream related to artificial intelligence. Dojo features custom chips, purpose-built for video training that should accelerate FSD development. Musk believes that Dojo could be competitive with NVIDIA-based systems in the future. With proof of concept, Tesla could monetize Dojo by selling AI cloud services to other businesses. More importantly, Dojo is tailor-made for AI vision systems, so it could help the company more quickly train the machine learning models that powers its FSD software. Play to win or don't play at all. Elon Musk said on X that Tesla's building an AI supercluster that, once complete, could be the world's largest. Processing hardware will be split roughly between Tesla's own AI hardware and third-party chips from NVIDIA and others. So let's talk about questions asked about Tesla. Is Tesla stock expected to rise? The average price target for Tesla is $211.46. This is based on 31 Wall Street analysts and is a 12-month time frame price target and is issued in the last 3 months. The highest analyst price target is $310 and the lowest forecast is $85. The average price target represents 5.73% increase from the current price of $200 as of Wednesday. What was the price of Tesla when it IPO'd? Tesla went public via initial public offering on June 29, 2010 at $17 per share. Tesla, however, opened the trading at $19 per share and finished the day at $23.89, a stellar one-day gain of 40.5%. So the latest closing stock price for Tesla as of August 5th, 2024 is $198.88. The all-time highest Tesla stock closing price was $409.97 as of November 4th, 2021. Who holds the most Tesla shares? CEO Elon Musk is by far the largest shareholder with over 20% of the company's equity. Besides Elon Musk, the largest shareholders are asset management companies like BlackRock, Vanguard, and State Street. Who actually owns Tesla? The ownership structure of Tesla stock is a mix of institutional, retail, and individual investors. Approximately 34.84% of the company is owned by institutional investors, 13.64% is owned by insiders, and 51.52% is owned by public companies and individual investors. So what if I had invested $10,000 with founder Elon Musk 10 years ago? You would be worth $2.1 million now. That works out to be more than 70% average annual return. The same $10,000 put in the S&P 500 during that time grew just 274% to $37,376. That's just 14% compound annually. Is Tesla a safe long-term stock? With its 4-star rating, we believe Tesla stock is undervalued and compared with our long-term fair value estimate, which we've raised to $200 from $195 after updating our models following the firm's first quarter earnings. We used a weighted average cost of capital for just under 9%. This is from Morningstar, by the way. What is the 5-year prediction for Tesla stock? ARK says Tesla could hit $2,000 per share in its analysis to probability that Tesla could be worth $3,100 per share or more by 2029, but it has only a 25% chance of achieving that. ARK's bull case is $3,100, its average expected value is $2,600, and the bear case is $2,000. Thank you so much for being here. My name is Claudia. I will see you in the next video, which could be this one. Goodbye.